Hey there, I'm Miles-Mattingly, your host for the Minority Money Podcast. I'm glad you're here. You know why? Because this is the place you can come to get your weekly finance, family, and fitness motivation, not only to experience success in those areas for yourself, but also to help others in our community achieve greatness too. Super happy that you're on the show with me, so let's jump right in. Welcome back to the Minority Money Podcast. I am your host, Miles-Mattingly, where we are changing the complexion of wealth. So wanted to get in here and have kind of not a special episode, but I wanted to talk about something specific. We have to talk about what happened at this bank last week. And I don't know if you know or if you've heard in the news, but last week, Silicon Valley Bank was actually closed. Okay, so they did a massive bank run. If you don't know who Silicon Valley Bank was or what they were, it was a bank that catered to many of the world's largest and most powerful investors, tech investors. It collapsed on Friday. It was taken over by federal regulators, becoming one of the largest lenders to fail since 2008. Okay, so we've seen this happen before. This bank runs or banks collapsing is not something that hasn't happened before. But Silicon Valley wasn't a huge bank, okay? Though it wasn't a huge bank like Goldman Sachs or Chase or Wells or any of those, the Silicon Valley Bank punched above its weighted class, meaning that it was bigger and it did more in the particular space. A lot of its clients included venture capital firms and startups, and it became a big player in the tech sector, successfully competing with a lot of the big name banks. So for this bank to fail, it is a big deal. Some of the companies and startups, and we talk about that on one side, the startups, if you think about it, one company that I can think that you may know is Roku. So Roku is the device that you have, for your TV to be able to stream from there. That's one of the companies that bank there. So what happens when so why is the bank, what happened to this bank? Business was booming, right? The business was going very, very well, but in recent months, they had been withdrawing money out of this bank. And so what happened was there was a bank run. Anytime there's a bank run, what that means is that's a time when a lot of the clients will come and begin to take money out of the bank. So we've seen this happen, like I said, many times before. There's actually a long history of bank runs and bank things that have gone wrong. Not since it was, we had something in the 1800s. I won't spend time talking about that, but we'll start into the 1900s. So we had one in like 1907 where we had a bank run. We, of course, had the things that happened in the Great Depression. That was another bank run. And due to this crisis, they created something called FDIC insurance. Okay. So now some of you may know what FDIC is and may have never really thought of it as being really important. But it was in 1933 that the FDIC insurance was created. And it was to help depositors not lose their money. Okay, so what happens was, since they had bank runs, they would come, and what a bank run is when people that have money at the bank come withdraw their money, not leaving the bank with enough money to cover the obligations that they have to all of the depositors. So what happened was, in 1933, we had the FDIC insurance come in. And a lot of people know about FDIC insurance. You've heard it, you've seen it. I used to be in banking a lot, so it's something that's often talked about. And with this coverage, it gives you up to $250,000 of coverage on your deposits that you have at that particular bank. Now, why is this important? When a bank fails, like this particular bank did, when they failed, what happens is, how do the people get the money out of the bank? So what happened, this bank was closed on Thursday, right? Closed on Friday. And what happens with the FDIC, they actually released a statement for the FDIC. And what they were talking about was, in Silicon, they were closed, but by the California Department of Financial Protection, which has already appointed the FDIC as the receiver of this bank to ensure the protection of its depositors. So after that, now they will make the new bank to take care of to take care of all of the stuff that's going on in the bank now with the people that still have money there. So they created the new bank through the insurance called the National Bank of Santa Clara at the time of closing. So they are immediately going to receive all of those deposits to that bank. Now, what happens there? There was about 17 branches that they had for this bank. The main office was there in Silicon Valley, and they will begin to distribute these funds for these people. They had approximately $2.9 billion in total assets. So this was not a small bank. So any customers that have money over that amount. Now, there's something that you can do when you have to get more. You can get more than $250,000 worth of coverage out of one person or out of one account, or multiple accounts, if you will. The way that you change that is by doing the titling. But let's talk a little bit more about what happens. So when this happened, this can really impact the businesses that banked at that bank. Think of it this way. If you had a payroll company, right? Say, typically people get paid on Fridays, right? That's a pretty fair statement. And if you were paid on a Friday, after this bank had closed, then you probably didn't receive a paycheck. And this is why it's important to make sure that you bank at banks that have FDIC and coverage, because that happened on Thursday. Now this Monday, people are able to get that money because FDIC has come in and begin to take care of the deposit relationships. Now, what does this mean for you in the future? This is the first bank that has failed. This is a very unique reason for this one failing, because it was big in the tech space. And if you've been watching the news or seeing anything that's been going on, the tech space has actually been getting hit pretty hard. You see stuff like different companies doing a lot of layoffs, trying to rework the way that they do things and be more efficient. We've seen through the pandemic that a lot of these tech companies were allowing people to work remotely. Then they started doing a lot of layoffs. So what was happening is this particular client base that this bank served was having some difficulties in that space. And what that meant was a lot of the people that were depositing money in the bank weren't depositing the regular amounts that they were depositing. They were depositing less because they were making less money. And since they made less money, they pulled money out. When they pulled money out, this began to scare some of the investors. And this is what happened with the bank run. I just wanted to give a little clarity around that. Now, what does this mean for you? Working at your bank, right? Sometimes having a regional bank is a good thing. Sometimes having a regional bank can give you a little scared. There's nothing wrong with regional banks. I don't think there's anything wrong with that. I personally like to always have at least two banks. That's just what I do. It's just something that I've always practiced. And we like to have a national bank, and I like to have a regional bank. So right now I have both. But for most people, this is not going to have any impact on you. It's going to only have impact on the regulators that are regulating what's going on in banking, and to make sure that this type of stuff doesn't happen. Now, it's super big news because it is a big bank and it is failing. And this is one. There was another bank, I believe, that was having some issues on the East Coast. I believe it was a New York bank. I didn't do much research on that, so I won't talk about that. But what I will say is there are, at this point in time, they're saying that no one is going to lose anything, if I'm not mistaken. So that's what I've heard up until now. There'll be more updates on this. I think this is a story that you should follow just to kind of look and see what's going on. Now, the market has reacted to this and it's actually gone up. So I wanted to get this quick episode out. One, to tell you who the bank was, tell you what happened and what you can expect going forward. We are going to see more regulations come out. We are going to see changes in banking. I don't know if it's going to impact you on a personal level, but we will see changes in the large grand scheme of things. This is pretty crazy stuff going on here, but I just wanted to get it to you. As you know, this is the Minority Money Podcast. I am your host, Miles-Mattingly, where we are changing the complexion of wealth. Until next time. Another great show down, but it doesn't have to stop there. Be sure to subscribe to the podcast on whatever podcast app you're listening on now, and give it a good rating, would you? If you feel really connected to the podcast, which I hope you do, find our Facebook community, Minority Money VIP, to support and be supported by others just like you. And again, we're glad to have you. While this podcast is meant to inspire and motivate you to live your best life, it can't be your complete one-stop shop. I know. That really sucks. But I don't know anything about your specific situation. So please reach out to an attorney or a CPA, or you can reach out to me, a financial planner, to help you with your specific situation. To get a hold of us, please reach us at fan at Minority Money Podcast. That's FAN at Minority Money Podcast, so we can get to know you there. Thanks for being here, and until next time.